record. Is that recording? Yes. Okay, Zoom is recording. Okay, and then we just need to start the Facebook Live. Hello. Okay. Hi, everybody. Okay, looks like we are now live in the event. I'm not sure that my first part one live video worked on Facebook, but I do have the recording. So during the break, I've just finished part one, and during the break, I checked to make sure that my recording was working, as I'm also recording it in Zoom so that I can post it on other channels later. So if you missed part one, don't worry, you can get it. I will share the recording of that. So where we are now is in part two, which is going to be how to calculate the CEWS 75% wage subsidy using the CRA spreadsheet. This is part two of a three-part webinar. I'm breaking it into three pieces so that if only one part is applicable, pardon me, for you, then you can skip ahead to that section. So this is going to be how to actually calculate it and use the CRA spreadsheet. The first part, part one, was how to determine if your business qualifies for the CEWS 75% wage subsidy, as well as a bunch of frequently asked questions. So go and watch part one if you missed that, and if you are not sure primarily how the program works. And then after this, I will be doing part three, which will be how to apply for the CEWS 75% wage subsidy. And hopefully I'll be able to walk you through an actual application as well. So I am recording this live on my Decimal Accounting Facebook page. I am Alicia Lowen. I'm the owner of Decimal Accounting Inc. We are a small accounting firm based on Vancouver Island in British Columbia, but we have clients across Canada because our services are entirely online. I'm just checking. Yeah, looks like that's running, and looks like my Zoom recording is working. Good. So let me start then with a short recap of a legal disclaimer. So this video is not endorsed or produced by Canada Revenue Agency. I am not a CRA employee. So what this is I'm an owner of an accounting firm. I'm a self-employed accountant in Canada, and this is my best interpretation of all of the information that is out there. It's very challenging because I think the problem is that we're trying to take language, the English language from, the bills that have been created in the legislation, and we're trying to translate language into math calculations. And there's a lot of room for interpretation. And so I've watched a lot of webinars that other accounting firms have done. I've read the bills, I've read the information that CRA has put out, and what I'm now trying to do is package that and simplify that for the person who is the business owner trying to complete this application themselves, or perhaps the accountant or the bookkeeper for that small business who is looking for a resource to help them with the actual application. Because even with all the webinars that I've watched, a lot of them have been really great and had lots of great information, but they have not shown an example of this is exactly how you calculate it and fill it in. And so that's what we're going to be doing in this part two section today. Okay, so I did my bio in part one. So if you would like to hear a little bit more about who I am and who Decimal Accounting is, then go watch part one. And my apologies for looking down here. I have notes because I want to make sure that I don't miss anything important. So the first thing that I wanted to show you then is where to get the spreadsheet. So CRA has created a spreadsheet that we can use, which is fantastic. There are other spreadsheets out there, but since they're not being produced, like other accounting firms or other people, they're creating their own spreadsheets, and that's great. But if I was a business owner, I would prefer to use the one that's being developed and given by CRA, because then if there's any errors in the calculations, then you've used the version that they gave you to the best of your ability. And we're going to go through an example of at least what my interpretation is of how exactly to calculate it, which I believe that this is accurate. I've gone back and forth with other accounting colleagues of mine, and so I know that a lot of people are now using the same method that I'm using, but it took a while to get there, because this is the sort of thing that, although it might originally seem simple, once you actually start getting into calculations, then a lot of questions do come up. And that's why I'm doing it today on Friday instead of on Monday this week. So the first step is going to be to download the template that CRA has produced for us. So that's on this website. If you just Google search CEWS, you'll get to this page. And then over here, it's got calculate your subsidy amount. And then when you scroll down, there's a button here, download the calculation spreadsheet in Excel. So if you haven't already seen this, then that's where you can go to download it. Just click that button, it'll download an Excel file to your browser, and then you open it from there. So I already have it open here. Now I'm on my Mac laptop, so this is in numbers, but it'll work fine. And this is what it looks like. And then you've got tabs for batches, weekly, bi-weekly, claim periods. Don't mess with this. This is just part of the back-end data that needs to be there. Okay, so before I do an example, I want to talk about the baseline remuneration and the current earnings. And I've got a bunch of tabs open here because I wanted to make sure that I had my resources ready for you for the calculations. So you need to have two different figures when you're filling this in. So you need to have like the info, such as the employee's name, and then whether they're arm's length or not. If you don't know what arm's length means, then watch part 1, because I discuss it in part 1. And then you need to know what is their baseline remuneration, and then what is their current earnings. So this is the point that was really tripping up a lot of accountants and bookkeepers, because the wording that we have here is really not clear about how it actually applies, and so and like how to calculate it in a real life example. And so I'll show you what I mean here. So the baseline remuneration says it is the average weekly eligible remuneration paid to an eligible employee by an eligible employer for the period that begins on January 1st and ends on March 15th. And then if they had any period of 7 or more consecutive days which they were not remunerated, paid wages, then you would exclude those from the calculation. So that's great, but what does that actually mean? It means that you had to have paid money, paid payroll wages to this person between January 1st and March 15th. And so the part that was very confusing to a lot of us is normally payroll is always based on pay dates. The date of your paycheck is when we would count that as a business expense, and that's when we would count it as income to you. So for example, a common pay period is bi-weekly, which would be like every 2 weeks. Oh, and I've got my calendar here because I was going to show this as an example. So for example, if I had a biweekly pay period of every second Friday, which is a common one for companies, and in January 2020, my first pay day was the 3rd, and then the next one after that was the 17th, and then the 31st. The money that I'm receiving on January 3rd would be for the 2 weeks previously. And this is how we normally do it for payroll. So this might be news to you if you're a business owner who doesn't do the payroll themselves. But what happens is the end of December, so if I work from December 15th to December 28th, that's my 2-week period of my wages. So my payroll cutoff is December 28th, but then the day that I actually get paid is January 3rd. But the cutoff there is the pay day. So the wages that I received on January 3rd, they're not 2019 wages, they're 2020. And on my T4, that amount I got paid on January 3rd would show up as 2020 income, not 2019. And so like this sentence here really doesn't give us any clarity about are we, or well, it sort of does because we figured it out eventually, but what we weren't sure about originally was, are we supposed to be doing this on wages paid on the day like we normally would, or are we supposed to be doing this on wages earned, like according to the days that they actually worked and trying to figure out how much wages are due from that date? So it's not quite as simple as it might originally seem. And I will get into what to actually do. But then for the current earnings, where does it say? There's a sentence in here. Okay. Any amount that is paid in respect of a week in the claim period, and then blah, blah, blah. So the amount has to be paid, but it's in respect of a week in the claim period. So that wording, in respect of a week, leads us to believe that we are supposed to use these pay periods on the sheet as far as when the wages were actually earned, not when they were paid. So if I am working during the week of, okay, and the first thing I need to do is select this so that those dates get populated. And I'm just working on the weekly tab here. Okay, so I've got March 15th to March 21st. So regardless of when I actually receive the money, if I was working during March 15th to the 21st, these would be my wages that I earned in that week. Okay, so that was the first question that it was not clear originally from what CRA had put out. Since then, they've put out a lot more frequently asked questions with answers, and so we've been able to figure that out. But so we now know for sure that what we're supposed to do is use our payroll records that we have to figure out the weekly amount that the employee earned during these, not that they were paid during these dates, not based on paycheck dates. But this amount for the January 1st to March 15th, that does have to be on paycheck dates. So they have to have actually been paid some amount between January 1st and March 15th for their baseline remuneration. And that amount has to be paid to them during this time period, but you still have to adjust it for the pay periods. So if you, like me, perhaps had already spent several hours trying to find information about how to calculate this, you may have come across some versions of other spreadsheets. I know there's one from Tax Templates Inc. that's free that a lot of people are using, and I tried to use it myself, but I disagree with the method that they have on there, because essentially what they're doing is taking the total wages that were paid in January 1st to March 15th and then dividing it by 10.71 weeks. Initially, that makes sense. And if you're confused at this point, let me show you why. If I go back to my calendar, the period from January 1st to March 15th goes like, okay, so we got the 4th, 11th, 10th, we get 10 weeks, full weeks through January and February to March 15th is a Sunday. So it's 10 full weeks plus 5 extra days. So 5 days out of 7 is the 0.71. So that's where the 10.71 weeks is coming from. But I tried it, and the problem is that if you have a semi-monthly period or a monthly period or a bi-weekly period, you get a different result using that calculation of total wages divided by 10.71 weeks. You get a different result depending on how your pay structure is, just the frequency of the payments. It affects that calculation to the point where you have a different baseline. And that just logically does not make any sense. And so I've now rejected that idea of 10.71 weeks. So if you're currently using that, I would say don't, and try this instead, because I have a better method that I think is going to be simpler. So if you've gotten a little bit lost, let me just recap for you so far. What we are trying to do here is we're going to fill in the CRA wage subsidy sheet that they've provided for us. And for each employee, we need to calculate 2 different things. We need to find out their baseline weekly remuneration, which is just earnings, wages, payroll, whatever you want to call it. And then we need to have their current earnings. There's a few stipulations, which is that the baseline has to actually be paid during January 1st to March 15th. The reason that it has to be paid is because they're trying to exclude someone who, let's say I'm a business owner and I have an incorporated company and I don't normally pay myself a salary. And now it's April and I'm saying, oh, maybe I do want to pay myself a salary. I'll just go back and create a whole bunch of pay stubs for January, February, March. No, you cannot do that. The amounts, because it would be sketchy to do that. So please don't be sketchy, because they are going to be doing audits, and I would hate to see anybody get audited over doing something that they shouldn't. Although in most cases, I don't think that people intend to do that sort of thing. They don't maybe have the accounting knowledge to know that certain things you can or can't do. So we are trying to follow the rules as much as possible here for what CRA has given us for instructions. So it has to be paid between the 1st and the 15th, because now you can't go back and create paychecks that were never there during that time. That's what that is for. And excluding some of the time would be like, let's say I had hired a new employee on February 1st, then I shouldn't be dividing their wages by like all the weeks in that time period, because they didn't work for that entire time. So I want to make sure that I'm using a calculation that's going to work, which is right here, for people who are also have started recently or were maybe laid off and then I hired them back. So we're going to exclude the weeks that weren't part of their total wages. And then we're going to do current earnings. But so first, let's just talk about baseline. That's what I've been discussing so far here. So I've brought this up on the screen so that if you are doing it right now, you could pause the video here if you're watching the playback and then try this calculation. So what you're going to do is, do not use your wages paid divided by 10.71 weeks. It's not consistent across all pay structures. So it's not going to, I believe, therefore, that's just incorrect. Because we like consistency, us accountants. Does not compute. So then what you are going to do is you're going to take the total wages that were paid in that period, divide it by the number of paychecks. So that's going to be how it'll get prorated properly, the number of paychecks. So regardless of how frequent people are getting paid, you'll be able to use any sort of pay period to calculate this. So you could have bi-weekly pay periods every second Friday starting on the 3rd, of January, and then you'd have like 1, 2, 3, 4, no, that one I already counted before. So that's 3, 4, 5, 6, right? That's March 15th. March 15th here is the cutoff. So that gets 6 paydays in that biweekly schedule. Or if I start on, if my first Friday in 2020 is the 10th, if I have an opposite schedule, which lots of people do, not everybody's on the same, this is just what I have for my company, but not everybody's on the same schedule. Some people might do every second Wednesday. Some people would be doing semi-monthly or monthly. So that's really where these calculations get complicated. And for those of us who are accountants and bookkeepers who have several clients who all have different pay periods, then you really got to wrap your mind around how to calculate these things properly. So then if I started on the 10th, then see what happens here. I've got 1, 2, there's my arrow, 3, 4, next one's going to be the 6th, 5. 5 paychecks, not 6 paychecks. In the last schedule, it was 6 paychecks because then I went to the 13th. But here I can't go from the 6th to the 20th because the 20th is after the cutoff of the 15th. So even with just those two, I'm going to have a difference between what that person got paid. So if I was to just take that and divide by 10.71, I'm going to get a different baseline, even if those two people have the exact same annual salary. It doesn't work. So you divide it by the number of paychecks. So let's say that that person had, let's do an example here. Where's my calculator? Okay, so if I am somebody who earns an annual salary of $52,000, I should be earning $1,000 per week, right? 52 weeks in the year, 52,000. Each of my paychecks would be $2,000 exactly in my pay periods. So what did I just say? In one I had 6 and in one I had 5, but it would be 6 pays of $2,000 or 5 pays of $2,000. So by using this total wages paid in the period divided by the number of the paychecks, no matter if you have 6 or 5, in that scenario, you're still going to get $2,000. Biweekly is the easiest one to calculate. So if your company has biweekly, then you can breathe a sigh of relief here because that's going to be easier for you. You know that that amount is equal to 2 weeks exactly, and so you can just divide it in half. So biweekly is the X amount here divided by 2, which would be 1,000, right? And then that is your baseline remuneration. And so, because I said I'm going to fill it in, then let's fill it in, shall we? So what we're going to do with the CRA sheet is the first thing you do is select your period that you're working on. And then notice here, it says batches and it says if you don't, so you can use the batches, but that's optional. If you do use the batches, then don't also duplicate that information in the weekly or biweekly sheets. So you have different options for how you're going to calculate it. Honestly, I would not do this batches thing. I would just go for biweekly. If you're only doing the one company and your company is biweekly, then use that. But if not, if you have some semi-monthly and some other things, then I would probably just get used to using this weekly tab. And if you have hourly employees, the weekly tab is going to be easier as well. So if you have a mix of salary and hourly, it would be really best to just list everybody here. So I'm primarily just going to talk about this weekly tab and we'll use that. So in this example, I am, let's say I am the owner and I'm on a salary bi-weekly. And then let's say I am, just so I can fiddle with a couple examples here, let's say another example is going to be a regular person who's on salary biweekly as well. So if I'm the owner, is the employee at arm's length? Yes or no? No. I am not arm's length from myself because I control the company. I get to make the decisions. I get to decide how much my payroll is. That's really what the main problem here would be, is I can say, well, I used to make $1,000 a month and now I want to make $5,000 a month. And you just have the power to change that. For other employees, they cannot. So this is to prevent anyone from trying to take advantage of it and starting to pay themselves salary or starting to increase their salary. It's going to be limited to whatever that person, yourself or someone else that you're related to who is arm's length, who's not arm's length from you, is, that was too long of a sentence and then I lost my train of thought. It's to do with the baseline. It's because then you're not going to get wage subsidy if you weren't paying that person between January 1st and March 15th. So in this scenario, I am the owner. I am not arm's length. I earned $52,000 last year. I'm going to continue to pay myself the same amount of salary. You know, perhaps my business hasn't been hit too hard, so I can afford to keep doing that. So my average weekly gross pay between January 1st and March 15th was $1,000 a week. I know this part seems simple, but that's because I'm using a simple example. It gets a little weirder if it's different pay periods. So biweekly is nice and easy. So if I received, what was I saying? One of them had $2,000 and $6,000. Okay, so $12,000. So, oh shoot, didn't mean to close my calculator there. Where'd it go? My bar for my recording is in the way. Here it is. $12,000. I've received $12,000 gross wages, but it was 6 paychecks. Or I've received $10,000 gross wages, but it was 5 paychecks. Then I would divide by 5. So that is how you will get around that part with the funny periods. And it works for semi-monthly and monthly. You just have to multiply. But I'll show those examples in a second. So for biweekly, okay, so baseline was $1,000 a month, and then I'm going to continue paying the same salary. Sorry, did I just say $1,000 a month? I meant a week. So my baseline is 1,000, and now I'm going to continue paying my same salary. So it doesn't matter when I received the paycheck. I might be paying myself monthly, and I might have only given myself a paycheck on March 31st. But if I put all $4,000 into that box, then what's going to happen here is I'm only getting wage subsidy for that 1 week. So that's how we know that these dates here can't be based on the paycheck date. It just doesn't work. We have to split it up into when the wages were actually earned. So I'm earning $1,000 a week. Doesn't matter when I actually pay that money, but the money must be paid before I can claim the wage subsidy. So this is actually interesting. If you are on a monthly schedule, you won't be able to do this first period until after April 30th, because it is part of the rules that the amount has to already be paid before you can claim it. So even though we're claiming this $1,000 right here that was earned, and part of this as well, that was earned in the beginning of April, if that money hasn't actually gotten paid out until April 30th, then you can fill in this application on May 1st, but not before then. So the pay period does kind of limit you for how off or when you can submit your wage subsidy claim, but it shouldn't affect the actual calculations. So here I've got $750 per week. So I've got $3,000 for this person. Then that makes sense. That's 75%. Now I want to show you how this changes if, in the scenario, if I had 0 pay to myself as the owner, during January 1st to March 15th, and I've selected that it's not arm's length, so it's myself, it's my spouse, it's my kids, it's my brother-in-law, whoever, then now I get 0 subsidy. So that is working correctly here. That's the intention of the program. And let's just play with it for a second here. If I used to make more, then remember how I just showed this example and the amount I was getting was $750 because it would be 75% of the 1,000. Well, if I'm the business owner and I've had to now reduce my salary, if I used to get $2,000 per week, so $104,000 per year, and now I've cut my salary in half because I don't have the revenue and I just can't afford to pay what my full salary was. Even though I'm paying myself $1,000, I'm going to get $847 as my wage subsidy because it's 75% based on my pre-crisis, on my baseline. We can call this. They call it pre-crisis remuneration, but they're also calling it baseline pay. And then I get a higher amount of subsidy. That would be true for myself, and it would be true for other employees as well. So if you've had to cut someone's salary, you may still be able to get a higher amount than 75% if they used to get paid more, because that's one of the factors that's coming into the calculations here. And then, okay, let's say I was a regular person with a salary of the same. And I used to get less, and now I'm getting 1,000. Well, that's okay. I can still get $750. So the reason that that's working at the higher amount here is because this person is at arm's length. But for myself, if I tried the same thing for myself, it's a no-go. Well, not quite. I just get less, right? So these are the exact same, other than this is for the owner who's not arm's length, and this is for someone else who is arm's length. So in this scenario, let's say I had someone part-time, and then now I need them to work more, or perhaps I've increased their pay as kind of like a hazard pay. I know some businesses are doing that. So if I was having someone do deliveries for my company, and now I want to increase their salary because they're out there doing deliveries and I feel like they should get paid a little bit more to be a frontline worker, then I can increase their salary now and I'll get a higher amount of wage subsidy. But if I try and increase my own salary, then I don't get more because it's based on what my pre-crisis wages were, and that's what this yes or no is for the arm's length. So it's really important that you understand arm's length and that you use that correctly. Okay, give me a second. Okay, that's biweekly, which is the easiest calculation. Okay, semi-monthly, let's do semi-monthly. Salary. I think I might not do a monthly. You can probably figure that out just from this, but I'll do a semi-monthly and then I'll talk about hourly as well. I know a lot of people will have a semi-monthly pay period because business owners tend to like semi-monthly. I think probably because they like the comfort of knowing exactly when the pay days will be, that it's always going to be the 15th and the 31st. But honestly, bookkeepers and accountants hate semi-monthly. And so I always try and talk people out of it. And it's for exactly this reason, because the calculations for anything that we're trying to do just gets messed up, because semi-monthly is not, there's not a consistent number of days within it, right? Like the paycheck that I get on January 15th is that for wages that I earned from January 1st to the 15th, and then I'm getting paid on that same day? Or do I have a cutoff that's a few days before? People will choose their cutoffs at different days. It's not going to always be 10 days in the period. Like when you do bi-weekly, it's always 10 days worked, and then it's every second week you have your pay day. With a semi-monthly, like if I'm in January, it has 31 days. And then if I'm in February, well, this year we had 29 days, but the amount that I'm going to get paid is the same for those 2 different months of work, unless I'm hourly. So I'm talking about a salaried person here. So the amount would be the same, but I haven't actually worked the same number of days. So now when we're trying to calculate like what is your wage per week or per day, it's very difficult with semi-monthly because it's not always the standard same number of days. And you might have seen, if you're a bookkeeper or accountant watching this, you might have seen there was a really good article, a really in-depth article posted by live.ca, where what they were doing for semi-monthly was prorating it to a daily wage earned and then like recalculating it back for how many days were exactly in that pay period. And I was just like, oh my goodness, this is insane. I'm sure that it works and is accurate, but I think also my method will work and will be much simpler and easier for people who are a bookkeeper for a company or a business owner themselves to apply. So what my method is take for the baseline total wages paid in the period of January 1st to March 15th. So you likely have 5 paychecks. If you're on semi-monthly, you would have 5 paychecks: January 15th, January 31st, February 15th, February 29th, and March 15th. So you're gonna have 5 paychecks. Whatever you've earned, whatever you've been paid in that time, divide it by 5 checks. So now what you've got is an average per pay check. You still have this problem though of that paycheck not representing exactly 2 weeks. So I know some people with semi-monthly have been taking that semi-monthly check and dividing it in half to get a weekly average. That's not strictly correct because a week is 7 days. And with a semi-monthly, it's not a 14-day period. There's too much variation in there. And so it doesn't work to just take your average of your pay that you've got on semi-monthly periods and then divide that check amount by 2 to get a weekly. It won't be accurate. And it's important. This might seem really fussy, and it is because we're accountants and we want to do things right. But it might seem very fussy, but it is necessary because it will directly affect the amount of wage subsidy that you can actually claim. And I think everybody wants to get every dollar that they are entitled to. And so you want it to represent what is truly a week, not a week plus, an extra portion of a day. So what you can do instead is, I'm going to use my calculator on my phone here. In the same example of this person who earns $52,000, because I'd like to be able to compare it, each of their, hang on one sec, I'm going to go 52,000 divided by 12 months divided by 2. So every paycheck that the person who gets 52,000 semi-monthly, every paycheck of theirs is 2,166. And so that amount is per paycheck. They will have received 5 paychecks. Okay, 10, 8, 33. So if you are I wanted to also show you in QuickBooks how you could look for this. So if you're using QuickBooks Online for your company's bookkeeping, you can go to, I just wanted to show this with the sample company. Maybe I can blur that out later. This is the sample company, so it's not going to show exactly, it won't show me any numbers, but I'll just show you where to find it. So you can go through your reports and then look for the one that is Payroll Summary. Okay, it's not going to come up here because I don't have payroll engaged on this sample company. It's a fake company, but what it is called is Payroll Summary. And then if you look for that report in QuickBooks and you look at the history, so you're choosing the dates, pardon me, you're choosing custom dates, January 1st to March 15th, and then you'll see all the paychecks that were paid to a particular employee. You can select from a drop-down menu which employee as well. And you'd get their total wages paid in the period of January 1st to March 15th. And then you're going to divide that by 5 paychecks if you are semi-monthly. So this person has received $10,833.33 gross wages. 10,833.33. And then you divide it by 5 paychecks received, which would be an average of 2,166 per paycheck, right? But sometimes people don't get the exact same amount every paycheck. So that's why I'm doing it with this average, because it'll work for your hourly people as well. So whatever that total is that they've received semi-monthly divided by 5 paychecks equals, this amount is the average per paycheck. Then that's your X amount. So then for semi-monthly, go X times 24 pay periods, which gets you the annual average pay, divide by 52 weeks, which gets you the weekly average pay. Times 24 divided by 52, 999.999. So $1,000 per week, which aren't we happy, because now we got the same result that we did with bi-weekly, which is what we've been trying to do from the start. So here is my person. So now I am the owner, and I had salary semi-monthly of, I guess I should label that on here. What did I say? 2,166? Of 2,166.66, and this person had salary bi-weekly of 2,000, just so you can kind of track what we're doing here with the examples. And I was messing with these, but that's fine. So then same thing. So the semi-monthly, now because you did that calculation, you know that their average weekly gross pay is 1,000, and then their earnings. So how you're going to figure out this is the exact same calculation that you just did, so that you can get the current earnings. So they likely got a paycheck on March 31st and on April 15th, if you're semi-monthly. So those are the 2 checks that you would look at, March 31st and April 15th. And then you would take those 2 checks, divide it by 2. So do this same calculation that you just used for semi-monthly in the baseline. So you've had 2 checks there. Let's use a different amount here. Let's say you paid them 2 checks and the total was 4,500 gross wages on those 2 checks. It was semi-monthly. They got March 31st and April 15th, but it was for wages earned in those previous weeks. Now you're going to divide by 2 because you had 2 paychecks, is $2,250 per pay, but that's per semi-monthly pay. So you don't take $2,250 and divide it in half, because that does not equal 1 week. You take $2,250, you multiply by 24. That now gets you what the annual average is, and then divide by 52 weeks. That now gets you what the weekly average is. So 1038.46. I hope that makes sense for you guys, because this took me a long time to figure out. Okay, please excuse my slow typing. It's because I'm just on my laptop and I don't have proper keyboard in front of me. Okay, beautiful. So now that is what I'm getting, and because I have to select as well, is this person at arm's length? Nope, because it's owner. And now if you just noticed, it changed back to 750, because in this example, I just made up an amount that I'm currently getting paid. That's why it's higher, but I just wanted to show something other than the 52,000, and it's limited to 750. But if I had the exact same situation with a regular employee, so they have been getting a salary semi-monthly of 2166. Are they at arm's length? Yes. They've been getting $1,000 a week because that is what the baseline of 2166 semi-monthly is. And then I said in this example, what did I say, 4,500 or something? 4,500 is now what they got paid in 2 paychecks, semi-monthly, times 24 divided by 52, 1038.46. Put that in my spreadsheet. Oh, maybe I can just copy it from here. I think I can. And then the difference between those two people is because of the arm's length. So I've slightly increased the salary of my regular person, and that is all good. I'm going to get a higher wage subsidy amount for them. Okay, I think that's good enough for salary examples. I want to just quickly talk about hourly, and then that will probably be the end of this example because video part 3 will now, the next section after we take a break is going to be how to actually fill in the application, because you can now do that. Applications are open this week. And like I said in part 1, they will start to get processed next week, starting Monday, May 4th, with direct deposit as early as May 7th. So that's actually a lot quicker than what I was expecting. So way to go, CRA. Thank you for making our direct deposit come to us nice and quick. We all like that. And if you don't already have direct deposit set up, then do that now. And I would actually do that before you submit your wage subsidy application, because you're not going to want to have to wait for a check in the mail. I think that'll take a number of weeks probably to get checks in the mail. So you'd be better off to just wait a few extra days and get access to CRA My Account and put your direct deposit in there. Okay, so before we wrap up part 2, we're going to just talk about hourly. So hourly is going to be slightly easier because we can still follow the same method that I showed you for calculating the baseline. And then because you hopefully have their timesheets, it's a lot easier to figure out what their wages earned were in these weeks. And again, remember that for these weeks, we're using wages earned and not paid. Doesn't matter when these were paid. And then in this baseline, it does need to be paid, but we're still going to prorate it based on the pay schedule to figure out what their average weekly pay is. So for an hourly person, let's say again that I'm the, let's not do owner. Most owners don't pay themselves hourly. I've never seen a situation where an owner pays themselves hourly. They always just take a salary, so that's not very likely. So I am an hourly employee, a regular person who works for my company. Are they at arm's length from me? Yes, they are. And so to calculate my average weekly gross pay, again, I would do the same calculations here that I've been using for baseline. So take a look at the payroll summary in QuickBooks, or if you're not using QuickBooks, I think in Sage, I think it's also called payroll summary. It might be called employee summary, or I'm pretty sure it's called payroll summary. It's been a while since I've worked in Sage, but other programs as well. You'd look at the total pay stubs and take the gross wages. So not the net after tax and all that, you're taking the gross wages, which does include vacation, overtime, stat pay. It'll be the total gross pay. And then divide that by the number of paychecks they received. So look at your calendar, look at the pay dates on your calendar. Is it bi-weekly? Is it semi-monthly? How many paychecks did they receive? Take the total divided by number of paychecks, and then do this calculation. If you're bi-weekly, take that amount divided by 2. Semi-monthly, take that amount times 24 divided by 52. And for monthly, go times 12. divided by 52. And that will work whether you are hourly or salary, because what you're trying to get here is an average. Is it 2 o'clock already? Oh my goodness. I have not had lunch, so we're gonna need to wrap this up so I can eat lunch. Okay, where am I with this? Okay, so we did that. We're gonna put in weekly gross pay. Okay, so this person's hourly, and let's say they were monthly, because I haven't done that example. Sure, just for fun. Because a lot of people do use monthly, and that's perfectly fine. So then your paycheck dates would be January 31st and February 29th. And those would be the only 2 paychecks that are included in the baseline. And you're not going to divide it by 2.5 months, because it doesn't cover 2.5 months. This is the same thing I was talking about earlier with the 10.71 weeks. It doesn't work. You need to divide it by the number of checks received. So if I've got an hourly person, let me get my calculator. We'll just make up a fake one here. Let's say my hourly person gets $20 an hour, and they worked, let's say in 2 months. Oh, I don't know how many work. They usually work maybe 160 in a month if they're full time. Let's just say they work 250 hours. So they got $20 an hour. They worked 250 hours in those 2 months. So they received, oh, this will be nice. Yeah, they received 2 paychecks for a total of $5,000. And that doesn't matter if it was like $2,500, or whatever amount in month 1, whatever amount in month 2. It's just the total is $5,000 for the gross wages. And then I'm going to take that total wages paid, divide it by 2 paychecks, January 31st and February 29th. So that is my average per paycheck. And this company has a monthly pay schedule. So I now multiply this by 12 months. And then what I'm coming up with is the annual average that this person's earning, whether they're hourly or salary, based on just these 2 pay periods. Doesn't matter if they're, I hope I'm not confusing people with this, because we're just trying to come up with the average. So it doesn't matter if they're actually going to earn 30,000. It's just, this is how we would break it down into a weekly average total. Then I divide by 52 weeks to get their average weekly is $576.92. Here it is. Okay, you got $576.92 in your baseline. And then they got paid again on March 31st and on April 30th. So let's say on March 31st, they got, bring my calculator back. Let's say for the month of March, they worked a little bit less. So they worked 120 hours. So 2,400 was their total for the month of March. And we're not going to divide that by 3 weeks here and plop it in for 1, 2, 3, because that doesn't make sense. And it's not covering those periods. So we still need to come up with what is the weekly average. Oh, hang on a second though. Okay, no. With an hourly person, sorry, I'm getting mixed up with a salary. With salary people, we don't know exactly how many hours they worked every single week. And so we have to do an average. But with an hourly person, we should be able to come back to the source, which is the timesheets. And so we had to average to get the baseline, but now we don't need to average. So what we would do as the business owner or as the bookkeeper or accountant is try and get the actual time sheets and confirm how many hours did this person work between March 15th and the 21st. And like that could be he worked 20 hours in this week, 20 hours, and I said they were earning $20 an hour. So then that's 400 for that week. So that part actually should be relatively easy for an hourly, because you should be able to see what their hours were during this time period, multiply it by their wage per hour, and then put those amounts in there. So I'm not going to do the rest of that because I think you've probably figured out what I'm getting at. And then in this case, this person's subsidy is actually equal to the full amount that they're receiving because they're arm's length and because they used to get paid more and now they're getting paid less. So if I were to just do, they're working less now, they had this much, then the subsidy I'm receiving for this person is actually equal to 100% of what I'm paying them because I've been forced to reduce their hours. And so that is actually a strategy that you can use, and it is perfectly okay to do that, which was somewhere in my notes. Oh yeah, here's my strategies. Yeah, so one strategy would be to reduce the employee's hours. If you have less work for them, you can keep them working part-time, and then you can get full subsidy in most cases, like depending on how this calculation breaks down. But I've paid this person $1,300 for these 4 weeks, and I've received subsidy for them of $1,300. So then I don't even need to worry about that like top up thing, right? If I can afford it or not. It's like every dollar that I'm paying to this employee, I'm getting back because they're now working reduced hours. So yes, you can reduce their hours, but a warning here for, at least for British Columbia employment standards, you cannot reduce someone's hourly rate. So if you used to pay them $20 an hour, you cannot now decide, well, I can't afford to pay you $20 an hour anymore, so now you get paid $15 an hour. And whether their hours are more or less, the part about reducing their hourly wage, that would be illegal to do so under BC employment standards. So you can't do that, but you can reduce the number of hours that they're working. And then that would actually work out pretty well in this wage subsidy scenario. I mentioned in the last video, you can have people on paid leave. So you can be choosing to continue paying their salary or paying their average earnings, even with them not working, for the purpose of claiming wage subsidy and for the purpose of keeping that person employed by your company and keeping them on payroll so that they don't have to go and find a different job, or they don't have to go and apply for CERB. They can continue getting their paycheck from your company, and then you get wage subsidy for them. And there's an additional rebate of the CPP and EI company portion that you pay on their paychecks if they're not working. You could also choose to reduce someone's salary. So with salary workers, it's not really based on hours worked. And so I would say it is okay if you need to like, if it's you or someone who's kind of connected to you, they'd probably be fine with taking a lower salary temporarily just to be able to get wage subsidy. But you would need to bring it back up afterwards. And in that scenario, I think, to be fair, you'd probably have them working less hours than full-time, because it wouldn't really be all that ethical to cut someone's salary but still have them work the same hours. Although I don't know if that would be as much of a problem as it would be with hourly wages. You definitely can't do it with hourly wages. In this scenario, it might be fine with a salary. Certainly is fine if it's yourself. You're free to make that decision about yourself. But I wouldn't really recommend doing that for people who are arm's length employees, unless you have no better option, right? If you're just forced into it and it's better to keep them on wage subsidy than it would be to lay them off completely, then that's kind of the scenario that we're in. And oh, right, yes, I forgot. Okay, so then what you have to do is come to the first tab, and then you'll use these amounts. So the amounts that you put in on the sheets are gonna pull through to the first tab, and it'll say, this is what you're gonna use when you fill in the application, which we're going to do in part 3. So we will now take a break. So this is the end of part 2, which is how to calculate the CEWS 75% wage subsidy using the CRA spreadsheet. I hope that that was informative and beneficial to you. I hope that you followed my calculations. If you did not, I'm posting the recording, so go back and watch it again. And then we will take a 10-minute break, maybe 15, because I think I need to eat something. Yes, I do. And then we will do part 3, which is how to apply for the CEWS 75% wage subsidy. And there are 3 different ways that you can apply. And I'm gonna just test it out before I come back and make sure that I'm able to show you, hopefully, a live example of how to apply. Okay, signing off for now, and we'll see you soon in part 3.